This is Rogers Communications Q2 2022 earnings call summary. They beat on both profit and revenue. However, the stock price has not performed well at all, and that has everything to do with the acquisition of Shaw Communications, which is also a company in our basket of stocks to invest in. This is a fairly large acquisition, something like $26 billion. And it looks to create yet another huge telecommunications company in Canada. The deal was struck back in March of 2021, and the Canadian government just will not allow this deal to go through. The last news on this acquisition was that Rogers is to sell off a piece of their business to a third party before taking on the acquisition of Shaw. The Canadian government regulators are concerned, of course, about competition in the country. A lot of the reason why we are invested in Rogers is because of that fact, right? There aren't as many competitors in the Canadian market, and so that makes a company that's already in a very stable sector such as telecommunications even more stable, being that they don't really have to compete as much as the U.S. companies do. Rogers has now said that they're extending the date for this acquisition to be done by the end of the year. Whether or not that's going to happen, it remains to be seen. That is just a date that was given. A large part of the reason why that date was given was because Rogers, in the case of many acquisitions, companies go to banks and they say, hey, we want to purchase, such company. Will you please lend us some money to do so? And so Rogers has bonds that they have taken out, and those bonds, just like a loan, are paid back with interest, okay, to the financiers, to the investors. And so the bonds are going to end at the end of the year, meaning that if Rogers has not used the money from those bonds by the end of the year, they completely lose access to those funds, which is a huge issue. When asked about this, the CEO said that basically, if in fact the acquisition does not get done by the end of the year and they do lose that funding, they will simply have to either ask for an extension of those funds, or they're going to have to find new funding. And one of the things that the CEO said that really troubled me, and I don't know why it did not hurt the stock price more than what it did, was that they will tap the capital markets. And tapping the capital markets means selling shares. And whenever a company sells shares, it increases the number of shares that are in the market, which decreases the stock price, right? Not only are they decreasing the stock price, but they're using those shares to purchase a company that isn't really going to add much profit to the company at all. It will hopefully reduce some costs, right? It will make doing business easier with one less competitor in the way, but it won't necessarily add any profit to the bottom line right away. So having to sell shares of the company to do that is less than optimal, but it is an option that the CEO laid out on the table amongst some other things. So that's it. I can imagine that if the Shaw acquisition does not get done by year end, they keep pushing the date, we're going to see the stock price continue to falter and fall. Even though the business is doing fairly well, it's in a defensive sector. and it's in a country that, again, does not have a lot of competition, and is very closed and very stable as far as the economy goes. Just what you're seeing here on this graphic, it's just how their revenue is broken down. As you can see, wireless is a huge part of what they do, followed by cable, and then media being 13%. The media portion is what I'm excited about with this company, which is the sports. Okay, on the right side, the adjusted EBITDA is basically going to be profit. Okay, that's the difference. So 69% of the profit is wireless, 33% of the profit is cable, and minus 2% of the profit is in media or from sports. And so it is good that the sports are coming back, but they are not back yet. During the earnings call, the CEO said that the media component of the company has returned to profit, but then here in this graphic, it shows a negative. So I'm not quite sure what that is about, but we are happy that a lot of the travel restrictions have been lifted. People are starting to travel to Canada more. We're starting to see stadiums open up and people come back to games and stuff like that. So the media is definitely open. Sports is definitely open. So we hope to see some more profit from this side of the business that's been losing money for quite some time, at least since the pandemic. But it is possible for it to come back and come back in a really strong way. Let's see, anything else? Oh, the CEO or CFO rather, was asked about the current economy in Canada and what they're seeing from their perspective. And it was said over and over again that the same issues that may be seen here in the States are not being seen in Canada at all. So while there is, this fear and possibility of recession, Rogers just isn't seeing that in their customers. Their customers are still spending money. There are no real credit risk, meaning people not paying their bills and so forth. None of that is going on. And we don't expect to see much of that in the near term anyway. If things get much worse, I think they'll get worse here in the States before they do in Canada. And again, that is the main reason why we're invested in this company, other than something like a Verizon or an AT&T. All right, that's it. Oh, no, I do want to touch on this because this was a big deal. On July 8th, the company did experience an outage. The outage was due to some sort of coding error, which then turned into an equipment error. And there was an outage for 5 whole days. The company says that they plan on spending something like $150 million to credit persons' bills in the next quarter, but they don't expect that $150 million to be a big impact on profit somehow. I don't know, but that's what they said. They're also planning to spend something like $250 million to segregate their systems so that if in fact the outage happens again in the future, it won't affect everyone. It'll only affect a certain, consumer sector or consumer section or something. Other than that, they have $10 billion that they have put aside to continue to grow their infrastructure. Fiber optic is the biggest. Right now, they're saying that some of their fiber customers are seeing 2.5 gigabytes up and down, which is great. But they are looking forward to having 8 gigabits up and down with their new fiber optic infrastructure. So that's really good to hear. 5G is still rolling out, but I don't think anyone's actually using 5G yet. That's something that's coming, I guess, in the next couple of years. But again, $10 billion set aside to grow infrastructure sounds really good. And I guess the best part is if we do see a real slowdown, then they have it within their rights to withhold that $10 billion and not build out infrastructure but use it to maybe pay down debt or just as a cash cushion to cover any sort of losses that can and will happen. So again, really great quarter. Everything looks good except for this Shaw acquisition that again has really hurt the stock price. And if it does not get done soon, will continue to hurt the stock price. And who knows what the future will hold if in fact, we get to this deadline at year end and the deal still isn't done. Does Rogers completely give up? And if they give up, does that mean that all the money that they spent trying to get the deal done is now just sunk cost? So it's, again, I don't see any upside from this, honestly. If the deal does get done, maybe we see a jump in the stock price. But in reality, getting this deal done does not really mean that there's going to be any immediate improvement in the bottom line, in the net profit. Maybe over time, over years, we'll see an improvement, but not immediately. So I can't imagine the stock price moving much at all if the deal does get done, but you never know.